Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. Yesterday we have seen the false move for the week beginning. So let us see how exactly the market is behaving today. So let me focus the camera over that of the PowerPoint presentation. Asian session live market analysis on February 15th between 5 and 5:30 GMT. I'll be using the live market code page to track the market. I have also given the link for the same. You can use it and save it as a favorite link and try to use it to see the live market code page anytime during the day. Now let me focus the camera over that of the live market code page. You'll be able to see the codes. Currently Euro is trading around 1.3508, 1.3510. The low was 1.3478. Yesterday they came down to that level of 1.3422 and then subsequently gained back the level, and the high is 1.3526. We find 21 pips positive net change is seen. Normally they used to drop GBP in order to create the market sentiment, but this time they used Euro to create the market sentiment because they wanted to dump Euro GBP positions. From 0.86 they had dropped it to 85 and now 84 area. And you find that nominal gain is seen in the case of Euro GBP about 11 pips, and it is expected to go below that of 84 and go to 83 area today. So for that they are expected to gain more levels in the case of GBP. Currently GBP is trading around 1.6044, 1.6048, 1.6025 is the low, 1.6061 is the high, 10 pips positive net change is seen. So Euro is showing more positive net change when compared to that of GBP. Because of that, Euro GBP has nominally gained the level and it is expected to make further drop. And for that, they are expected to gain first the levels in the case of GBP, and followed by that, Euro is also expected to gain the levels. And many of the people have got the opinion or the view that the market has seen the high and it is on the downside. But that is how they create the market sentiment and induce the traders who have got the long positions to liquidate in a hurry when they see nominal profit, and then subsequently they want the market to go up. And why? Because many of the traders developed the bearish feel, and any rise on rally they are expected to sell. And this is a normal scenario come across every time. They make an extended downward move so that all turn bearish, and during pullback they intend to sell the currencies, and subsequently the players continue to make the pullback to the upside. Then they do the short covering and turn long on the higher side. Then afterwards the players just consolidate there and make a downward move. So traders, when they are emotional, whenever there is a drop and if they immediately think that after the drop they can sell, they are expected to be trapped. And in the case of USD Yen, 83.39, 83.42 are the current levels. 83.21 is the low, 83.42 is the high. We come across 6 pips positive net change. So Yen came down to 81 and slowly it has gained to 83 area, and once it goes above 83.45, you could come across that 85, 86 areas are coming very fast. So you come across a contrarian move in the Yen. When Euro and GBP are showing positive net change, Yen is also showing positive net change. So as a result, you will come across Euro Yen and GBP Yen are also in the positive net change levels, and they are expected to gain the levels in the case of Yen crosses. Because many people think that this is the high and they can take sell positions in Yen crosses, but they will make an extended upward move and try to induce them to do the short covering. Then in the case of Swiss franc, you know that when Euro was dropping, it was holding around 87 area and still again 87 area when Euro has gained back some of the levels, and it is expected also to gain more levels in the coming days. So when Euro CHF is trading around 96.90, 96.93, 96.81 is the low, 97.08 is the high, a psychological level. Around that they are making the swings. You find 9 pips negative net change when Euro has made about 22 pips positive net change. So it is not trying to drop more. The players are trying to hold and induce the traders to take sell positions in that and then subsequently gain the levels also. Similar to that of yen, USD-CHF, the denominator currency, is also expected to make the contrarian move of rising along with that of Euro and GBP alternatively. Then in the case of Canadian dollar, 98.76, 98.80 are the current levels. 98.70 is the low. They are just holding closer to that of the low. 98.96 is the high. We come across 12 pips negative net change. So it is showing USD weakening move, and initially they are expected to make a brief downward stop and then go and make an upward stop during the US session. So either way, they will try to make the stopments after setting the initial lows and the highs in the case of Canadian dollar on a daily basis. Whenever they make a quick drop below that of the initial low, you try to buy. Whenever they go above that of the initial high, you try to exit out of the position. That way you can do it very easily. Then in the case of Australian dollar, it was looking very weak when it was below that of the parity, and they catched up and come above that of the parity. And you find currently Australian dollar is trading around 1.004346 level. 1.0020 is the low, 1.0056 is the high. 16 pips positive net change is seen. So Canadian dollar and Australian dollar, they are showing USD weakening move. And here you come a little bit of a contrarian moves in the case of majors, and they are expected to make the USD weakening move towards close of Japanese session as well as during that of the European session today. So let us see how exactly they are expected to make the moves, and also refer to that of the initial lows and the highs set for the day, and see how they intend to make the market to move during the day. So let me go back to that of the PowerPoint presentation. Expected market moves, Japanese session swing and rise moves are expected. So towards close of Japanese session, they are expected to go above that of the high, and you would have, those who have noted down the initial lows and the highs would have noted it, that they made an upward stop in the case of Euro and GBP around setting the initial lows and the highs. After setting it, they made that upward stop and make a small dip, but still they are not breached the low. They are expected to gain that levels again. Then European session swing and rise moves are expected. So a little bit of a swing, a dip might be seen in one or two currency pairs during start of the European session in order to just create the market sentiment that market is going to drop. But Euro and GBP, they are expected to gain the levels quite well during the European session when the volume picks up. In US session, you will come across more of a swings till the mid session. Then afterwards, firming up move is expected. So they will try to firm up nominally and gain some more levels. These are all intentional moves, so slowly they will gain the levels. It's not a quick gain as you anticipate. See, they dropped quickly and then slowly they will gain the level. That means they will try to buy at all levels, the sellers. When they sell the position, they will try to buy those positions and try to slowly gain the level, so that the traders who have taken the initial sell will think of averaging the sells during the small gain and try to do more selling. Later on, understand that they have done the over trading by taking too many positions in close range, and subsequently when the market quickly make the gain, they will come for the short covering because of the margin erosion. So this is a normal scenario you come across, and people will think that your forecast, always you are telling that it will rise, whereas they are making a drop. And sometimes they say that intraday forecast is good, or sometimes they say intraday forecast is no good, because even a small swing of 50 pips or 100 pips, you know the daily capability is about 150 pips, upward or a downward move. And when they make such small swing, immediately the traders get perturbed. And that shows very clearly that they have got the tendency to do over trading, not be content with one or two positions, so that they can easily hold the position and book profit, because they have got a tendency not to use the stop. But when they commit more positions during small drop, and immediately when the players drop another 100 pips, they become jittery and started making a lot of comments in the blog. That shows very clearly that they are not able to understand the market. And if they question it, okay, market is making a drop and I am supposed to do sell and buy trade. When I sell, who is buying at the bottommost level? If they question it, then they will be able to understand. It is not a panicness during which the market just dropped like 9 pins. It is a question of slow drop and sometimes quick drop and reversal. And these type of moves are to be understood very clearly. And there is no point in me explaining 1,000 times or many of the analysts explaining it again and again unless and otherwise the traders perceive the market moves correctly. So for that they need to get rid of viewing at the levels. Instead they have to view at the type of moves the players are making from session to session. Then they will be able to easily understand any level you can do a buy and sell trade or a sell and buy trade depending upon the expected follow-up move during that particular session or the next session, whatever it is. So that sort of market reading is very, very essential. Simply comparing the levels all the time does not give any sort of indications for them, and they only tend to go in for the breakout trades. That is why you find after seeing all the traders' reactions, most of the analysts now they are just recommending only the breakout trades. So buy above that of the initial high or sell below that of the initial low and things like that. That sort of breakout trades only the players are now trying to trap. So when the traders try to do such breakout trades that sell after the drop or buy after the rise, the players trap them vulnerably by making the quick moves the next day. So unless and otherwise they understand that any type of trader, the players are there to trap. So we have to be smart enough to understand their intentions from time to time and try to use the trading strategy to limit the risk and maximize the profit. So this is very, very essential. That's what I perceive. And with regard to the initial lows and the highs, yesterday they made the move below that of the psychological level, 1.35. Similarly, they set the high. After making a drop yesterday, they gained back the levels and closed it around this, and that has become the low, and from there they gained the levels, and they are holding firmly around that of 1.35 area. So 1.3478 is the low, which is intact. 1.3524 was the initial high. They breached the high by 2 pips, and they are simply making it appear as if euro is weak, and they wanted to take it up further. They indicated by cutting the high by 2 pips. And also in the case of GBP, 1.6025. And in case if they make an upward stop and here by 2 pips and then start dropping and go below that of 1.35 and go closer to that of the low, then we can understand it was an upward stop and followed by a drop to make a downward stop and before making a rise. Whereas they are not done it that way. So keep that. They are only just making a dip and trying to buy from that of the traders who are nervous in holding the long position and try to exit out of the position. And this is not the first time. We have seen several times of that nature. They made even extended stop runs for a longer time and then subsequently reversed in a very big way. And that is a way they try to bring in a bouncing ball effect in that of the market. In GBP, 1.6025 is the low, 1.6060 was the high, and they cut the high by 1 pip. 1.6061 has become the new high, and they are not breached the low afterwards. From that of 3:30 GMT, still they are not breached the low. So understand that they wanted to firm up further. Then they are holding it in the middle level in the case of euro, and also in the case of GBP. Then USD CHF 96.81 is the low, which is intact. They are closer to the low. 97.08 is the high, and still they are not breached the low, and they are expected to slowly gain the levels in the case of CHF also today, because you come across euro is showing 22 pips positive net change, whereas CHF has reduced the number of net change to 9 pips. Then in the case of yen, 84.21 was the low, which is not breached. They are trading around 83.34.37, and 83.42 is the high, and they are expected to gain the levels again as they are doing the contrarian move. When euro and GBP are showing positive net change, USD yen is also showing positive net change, and they are expected to gain the levels in the case of USD yen also. Probably from that of a prolonged consolidation time frame, they could probably initiate the gains once it goes above that of 83.45. Then Australian dollar 1.0020 is the low, which is intact, currently trading around 1.004043 and 1.0056 the high, and they are expected to gain slowly the levels. This time around you are not going to see that they are quickly gaining 50 pips, 100 pips and things like that. They will intentionally make the gains on a daily basis. So at that time, if they make slow gains, don't sell, and you will be vulnerably trapped, and you will be tempted to do averaging, because the rise, the level gaining was not much. So every 30-40 pips you could sell, thinking that it will make one drop and try to average it or exit at entry point, but they are not going to give such chances. Then USD CAD 98.70 was the low. They are closer to that of the low. 98.96 is the high, and that is also not breached. And CHF as a Canadian dollar, as I explained, that could make brief downward stop or a false move after that of the low, and then try to gain the levels during the day. So more of a contrarian moves are expected today, because they show initially that contrarian move, or a typical contrarian move of positive net change in the case of Euro GBP as well as USD Yen. Keep that in mind, and already the commodity pairs are showing USD weakening move. So they are expected to make the USD weakening move in the case of Euro and GBP, and in the case of USD CHF and USD Yen, they are expected to make the USD gaining move. That is how it becomes a contrarian move for the day. So let me minimize the PowerPoint presentation and take up the questions which are asked. I'll focus the camera over that of the live market code page for us to track the market during our discussion. Balanced has got a question. Even though I like to buy and sell at the dips, it shows drop. One has to perceive the possibility of the change in the intentional move. See, whenever they make a drop, we have our rule that we wait for about 30 minutes. And if they breach the new low also, then we wait for 2 hours. And if they breach the new low, again, we identify it as an intentional move. And we don't take the position immediately, buy position. And we wait for 2 sessions to get over. The third session drop, we try to buy it. And obviously, from there onwards, they will start gaining the levels. So you have to differentiate whether it is a stop and or an extended move or an intentional move by looking at that as a time frame. There is no hurry in taking a position, and we are not going to miss that opportunity. The players will continue to give trading opportunity on a daily basis. And only thing is, you have to patiently identify the entry point, then you will find the exit point comes very fast. If you fail to identify, then probably you may have to hold the position for a long time. Still, you will be able to see profit because the market is an upward move. And intraday or 1 or 2 days or a big beginning, they could make a false move. You should be able to understand that. Then it will be very easy for us to track the market. Then ICROM. Yesterday we saw when GBP was at 1.60, GBP CHF was also at 1.60, 1.6. This can be the true when USD CHF is exactly at parity, but this was not the case. How did you see the triangle moving forward? No, sometimes they make the moves in such a way, in the case of crosses, as an extended move and then later on catch up with it of the major. But actually speaking, they have to make the moves either as a contrarian move, gaining the levels in the case of GBP or gaining the levels in the case of USD CHF. But at times you come across about 50 pips or so, a deviation might be seen, but it will be caught and they will try to bring it to normalcy at that time. Because if they wanted to handle 2-3 pairs simultaneously, they will try to hold one pair and 2 pairs at a time they handle it. And they have to handle all edges and the crosses so that they will be able to make money. And they have to bring in the swings, only then the traders will enter. If they simply hold one currency for 2-3 days like USD Yen and for several days, you find gradually the volume dwindles from that particular pair. No, they have to bring in that volatility. Only then the traders will think there could be a buy opportunity or a sell opportunity. Then bond. Do you see GBP reaching 1.62 today? Yeah, there is a likely chance during the late European session we could come across GBP gaining about 100 to 150 pips. Genius. A good trade you pointed out is 35.20 or around there for 34.80, looking at the chart and such. Now they are holding above that of the psychological level 1.35. They have not breached the low, whereas they have breached the high. And after breaching the high in the case of euro, they would have dropped quickly and gone below that of the psychological level 1.35 and come below. Then there is a chance that they could make a downward stop and before making a rise. So at that time you can buy. Now they are holding around that of the psychological level. So they may briefly show 1.34. 99 or 1.3501 and things like that, and then take up euro. In the case of GBP, they are showing lesser net change when compared to that of euro. So obviously GBP is below that of the psychological level 1.6050. They are trading around 43-47 level. So they could come closer to that of the low, or they can come to 1.6033 or 1.6029 as a false move, or 1 or 2 pips brief downward stopping during the gap time they may do and then go up again. So that is mainly to make an upward stopping in the case of Euro GBP. Then followed by that they will drop. So upward stopping could be around that of 83.21. They may just go another 10 to 12 pips and then start dropping it. So during such upward stopping, if you try to take a sell position, you will be able to easily keep stop at entry. Then do you see euro breaking below? No, I don't expect it, because earlier when a lot of traders were holding long position, they made such drops and on Friday, and then followed by that a week beginning false move, they continued it and afterwards they have bought. So after buying all the positions and they gain the levels, I don't think they will let loose the levels now. If they let loose the levels, the short sellers will book profit. Then obviously the market has to fall further down. But if they drop the market in a big way, then gaining all the levels back might be a very difficult task. And you know that to rise the market, they have to continue to pump in the money. To drop the market, they can simply exit out of the positions. So that is why you find that rising the market takes a longer time, and also every time they have to confuse the traders. It could fall from here, it could fall from here. So that the traders will try to exit out of the long position and turn short. Then only they will be able to gain continuously the level and induce the traders to do the short covering. So they have to alternatively trap the traders. The long holders are to be forced to liquidate at the lower level, and the short sellers at the lower level are to come for a short covering at the higher level. And in that process, they try to buy more and sell less. As a result, all the buy accumulated, they have to exit. That is why they finally make one extended upward move about 300 to 500 pips. Quickly they gain the levels as if euro is not going to be available freely at any level. And any level you try to buy, they will show profit. That understand that they wanted to exit out of the positions. But at that time, everybody gives a bullish call. So that is why you find that most of the traders, after the rise, they try to buy and get trapped, and after the drop, they try to sell, they also get trapped. So you have to evaluate properly and trade. Then Anurag, do you see more downside in the case of euro? Crude? So crude is trying to trade at a lower level, so around 85 to 83 level, or sometimes 82 level they may go and then come to 87 level. Probably the 90 levels they may not revisit, and they could hover around between 80 and 90 for some time. See, like gold, you know that they took it around 1,400 and above, and afterwards created all the bullish field and then started slowly making the swing slide. Similarly, you find in the crude also, they exited most of that buy positions, and now they are dropped and buyed, and try to just gain small levels and then drop again. That sort of narrow range swing moves they are expected to make it, so that highest level buyers will not be able to book profit. When they make finally a quick drop, they will come for selling. Then FVC. With commodity, Australian dollar is rising. They also expect a gold and silver to rise. The gold and silver are expected to rise today during European session, and during early European session, US session, they are expected to make the drop and then hover around there. You can do either way trades in these, but you will be able to see that they hold in a particular level, say for example in the case of silver around 30 for a prolonged period. So in commodities, unless and otherwise the quick moves are seen, don't enter into that. Then you may not be able to see a quick profit booking opportunity. Ingenious. So in short, you continue to hold the view that euro and such will continue to go up, even though we have had an extended move to 1.3. Yeah, see, it doesn't mean that they have visited 1.38, they should not revisit again. It's hardly about 300 pips. And they made a downward move, and then they have come up to 35 from 34, and they will soon go to 36, 37 and 38. It's not difficult. Every day they can make about a drop or rise of 150 pips. A drop of 300 pips, they had taken a long time. A rise of 300 pips, they can do it in 2 days. Keep that in mind. See, if you understand the overall picture of the market, then you will be able to understand that they can catch up that levels in just a matter of 2 days, 150 pips in each day. And when they have taken the buy position, they will quickly gain the levels so that they will be able to exit out of the positions with a profit. And even after rising about 150 to 300 pips, when they go in for the selling, they will earn only about 30 to 40 pips in that, because they have to buy and rise the market. So their average will also go up. That is why they consolidate at the lower level and make further drop and consolidate, so that their buy level comes down drastically below that of the market level. So their buy level now will be around 1.32, because they have been accumulating from that 1.28, 1.29 level. Some they exited, and majority they are holding still. So they are not become bearish. They only make traders to become bearish. Keep that in mind. See, last month they gained the levels, and this month also they are expected to gain the levels again. But before that, they have to create the uncertainty so that the traders will sell. If they make very quick rise, no trader will sell. But whereas at that time we should exit out of the position. But people don't understand it, even though 1,000 times I repeated it. And you would have seen the result of it afterwards. But still, you are not able to accept it. That is how the market fear make you not to think logically. Then, worm. Is it not true that the majors are in the high of many months and due deep correction before going up again? So if you simply presume that they have to undergo a deep correction without any logistics or without any, and you have seen all the fundamentals earlier, like Greece problem, Irish problem, all those things, they have shown the bottom. And so for flimsy reasons, they will not simply drop the market just like that. So if you think that they have gone to the upper end of the channel, they have to come necessarily to the lower level of the channel, they will simply do the shift in trading zone. Keep that in mind. Then everybody will become bullish, but that will become too late at that time. You have to identify. See, what is a big deal after the rise telling that the market is bullish? Okay, we can say the market is bullish, but can we do buy and sell trade there? It will become very risky at that time. And similarly, after the drop, we can say that market is bearish. Can we do sell and buy trade? It is very risky there. Keep that in mind. If you don't understand that, you will never be in a position to become a successful trader. Then ICRM, EuroCAD and Euro AUD, should we continue selling or try to buy? No, continue selling. It shows that you are trapped. No, don't do that, because they are making contrarian move. And when they are rising euro and rising Australian dollar, and how can you just like that sell? It is very risky, sir. Okay, Anurag. What, with all commodities rising, why do you foresee that crude will slide? I think you are not related to commodity pairs and the crude. Most of the time, even though you could just refer to the chart and compare it, whenever they gain the levels in the case of euro, whenever they gain the levels in the case of gold and silver, they drop crude. And whenever they drop gold and silver, they rise crude. That's how they do it. You have to understand how they are playing. But it is not a perennial type of move. They can just continue to rise all and continue to drop also. But predominantly, they do this sort of thing. I'm not correlating. I'm just trying to tell you that they exit in crude and enter into gold. And again, exit from gold and enter into crude. That sort of moves they are trying to do it. With their limited money, they try to manipulate the market in the commodity market. Because commodity market, its volume is very, very less when compared to that of the currency market. So currency market, it's not commodity wherein they have only 3-4 units, and they have also their futures and options they have to handle. But in the case of currencies, you come across innumerable currency combinations, majors in the commodities, and the respective crosses, and also the exotic currencies or regional currencies they have to manipulate. So they take only 2 currencies at a time and do it because they have limited resources, or it doesn't mean, they wanted to make moves only in 2 currencies at a given time so that the impact will be seen in about 6 currencies. That is 2 majors and 4 crosses. That is how they do it and effectively earn money from the market. So that overall picture you should be able to understand. By studying the individual charts, we will never be in a position to learn it. And you have to cumulatively study all the markets simultaneously, all the currencies, majors and the crosses simultaneously. Then only you will be able to visualize how they are handling it. As I explained that they rise Euro GBP and also hold USD Yen in a positive net change. See, here they are holding it. They are making small swing. Then afterwards they will gain some levels in the Yen and swing again Euro and GBP. That's how they do it. And also you find that slowly they are bringing the net change in the case of USD CHF to 8 pips now. So earlier it was 17 pips. From there they have raised it to 8 pips negative net change. So understand that when you look into the live market quote page, you'll be able to gauge all those things. You don't become bullish and bearish. You just see that, okay, they gained about 12 pips here or 10 pips here like that. Instead of looking into the candle, green candle, when that movement is very less, the candle will appear big because there is an automatic expansion, reduction of the chart parameters. So as a result, you will find 3 big green candle, immediately you become bullish and buy, they will make a dip. And similarly, 3 reddish candle they will show, immediately you go and sell it, later on they reverse it. Because there might be a move of about 10 to 12 pips, but the candles will be magnified at that time. It depends upon the time frame you use to look into that of the charts. Okay, no more questions here. So let me go back to that of the PowerPoint presentation. So expected market moves for today. Japanese session swing and rise moves are expected. And European session, a very good rise is expected. Initial swing, at that time they may just make a small dip quickly in some currencies, not all, in order to handle the crosses, then quickly gain the levels. So such dips are buy opportunities during early European session. And US session, they are expected to swing and firm up slowly. And then tomorrow, 16th, they are expected to open very high in the market and continue to gain the levels with volatile moves. I'll explain tomorrow during the Asian session again what strategies they are trying to use it in order to gain the levels, and also how they are able to trap every time the traders. So we have to be very, very cautious. So it is something like walking in a street, on either side you come across the pickpocketers. So they are there to grab your money. You have to protect it. At the same time, if you become afraid, they will just come and hit you. And you have to express as if you are not afraid. At the same time, you have to walk through the street and also safeguard your money. Keep that in mind. Okay, initial lows and the highs. In the case of Euro, they breached the initial high. In the case of GBP also, they breached the initial high. And in the case of Yen, they are not breached the, in the case of CHF, they are not breached the low. And in the case of Yen, they breached the high. 83.44 has become the new high. So they are holding above that high. As I explained, that they wanted to gain the levels in the case of Yen, and then followed by that Euro and GBP are also expected to gain the level. See the contrarian move. And whenever you come across such contrarian move, you can take buy positions in the case of Euro Yen and GBP Yen. That will give quick profit for you. In Australian dollar, they not breached the high or the low, and they are in the middle level. And Canadian dollar, they not breached the low or the high. So slowly they will bring momentum. So they are actually giving momentum now in the case of Euro, GBP and USD Yen. The other currencies, they will handle it slowly and come up. So that is how they alternatively handle the currencies. Keep that in mind, and that can be easily identified by looking into that of the net changes in all currency pairs. So I take this opportunity to thank FX Trade for me to present this Asian Session Live Market Analysis webinar, and you participants who come here trying to learn my concepts and try to identify how exactly the trading can be done in the market without any bullish or a bearish feel. Instead, you try to identify either it's a buy and sell trade opportunity or a sell and buy trade opportunity. That sort of perception is very essential in order to consistently earn from the market. So thank you one and all. I'll post it in the blog, then we'll take it up. If needed, I'll try to give updates if there is any deviation from that of the expectations. And we'll meet again during Asian Session Live Market Analysis webinar tomorrow. Thank you.